Eurozone economy, resilience amid rate cut speculation. Resilience in the face of uncertainty. Can the Eurozone keep defying the odds? For months now, the Eurozone has managed to withstand economic storms that many expected would rattle growth and threaten stability. Even as global trade disputes simmer and uncertainties loom, fresh data reveals that the region's economy is showing signs of surprising strength. But here's when it gets controversial. While recent numbers fuel optimism in the markets, key policymakers at the European Central Bank, ECB, appear intent on cooling these soaring expectations. Let's break down what's happening. This week, the ECB made headlines by keeping interest rates steady, signaling a possible end to the easing cycle that has cut the bank's main rate down to 2%, slashing it by half over the last year. This decision, coupled with a cautiously positive economic outlook delivered by ECB President Christine Lagarde, immediately led investors to believe that the era of rate cuts could be drawing to a close. And this is the part most people miss. Markets almost instantly recalibrated their bets, with the consensus shifting rapidly from expecting another cut to seeing it as only a 50-50 chance for the rest of the year. What's driving this confidence? For one, Eurozone lending is now growing at its fastest pace in 2 years, a clear indicator that businesses and consumers feel secure enough to borrow and invest. Moreover, an influential ECB survey forecasts both quicker economic expansion and inflation precisely at the bank's target of 2%. Meanwhile, Germany, the largest economy in the bloc, has posted its 7th straight increase in business sentiment according to the latest IFO survey, suggesting resilience even as international trade friction continues to weigh on exports. But here's the twist. While the markets have grown bullish, top policymakers are urging caution. ECB President Christine Lagarde herself admitted the region had done a little better than most had anticipated last quarter. Yet, her colleagues aren't jumping aboard the optimism train just yet. French Central Bank Chief François Villeroy-de-Galhau has warned that risks to economic growth continue to skew to the downside. Uncertainty is still very high, he cautioned, advising flexible and pragmatic decision-making in response to ever-changing data. A nod to just how delicately ECB officials are playing their cards. Inflation is another hot-button issue. On one hand, prices are currently right at the ECB's goal, but several factors could send them downward. A strong euro, sluggish growth, and ongoing trade tariffs all threaten to dampen inflation. Villeroy points out that U.S. tariffs, the full effects of which remain unclear, aren't likely to shove inflation upward, and that the stronger euro is actually helping keep price growth lower. Finland's central bank leader Olli Rehn adds another layer to the debate, highlighting the option value of waiting. He suggests that such high uncertainty, especially with unpredictable U.S. trade policies, being patient and adapting to new information could be wise. And here's the controversy. There's a clear split between what the markets expect and what the central bankers are signaling. Several major financial institutions, Goldman Sachs, BNP Paribas, Nomura, Commerzbank, have now dropped their forecasts for more ECB rate cuts this year, while JP Morgan has delayed its prediction for another cut until October. Yet not everyone is convinced. Banks like Bank of America, Barclays, and UniCredit still anticipate a September rate move, albeit with reduced conviction. So what do you think? Is the ECB playing it too safe? Or are markets underestimating the risks still lurking beneath the surface? Will the Eurozone's resilience continue, or is a downturn waiting in the wings? Share your take. Do you agree with the cautious tone of the central bankers, or are you with the investors who think it's time to think positively? Let's get the conversation started below. Dollar stays range-bound as ECB holds rates, tariffs, and Fed watch. A dollar's subdued reaction. What's behind the ECB's decision? The European Central Bank's ECB decision to leave interest rates unchanged has left the dollar trading sideways against the euro. But here's where it gets interesting. The ECB's decision is not just about rates. It's about the future of Europe's trade relations with the United States. As expected, the ECB left its policy rate at 2% on Thursday, taking a break after a year of policy easing to wait for clarity over Europe's future trade relations with the United States. This move has sparked a debate among analysts. with some arguing that the ECB is on hold, while others believe that the central bank is just waiting for the right moment to act. The yen's resilience, the story of two central banks. Meanwhile, the Japanese central bank's deputy governor, Shinichi Uchida, has stated that the recent trade deal with Washington has reduced economic uncertainty, fueling optimism in the market about the potential resumption of interest rate hikes. This has led to a strengthening of the yen, which is expected to face persistent headwinds after Sunday's upper house election. But here's the thing. The European Union is nearing a deal that would impose a broad 15% tariff on EU goods, which could have a significant impact on the euro. This has led some analysts to argue that the ECB faces a challenge that is quantitatively different from the Bank of Japan. The economic fallout, a mixed bag. The latest PMI data has shown fragility in France following budget cut proposals, but also resilience in Germany and other parts of the Eurozone. This mixed bag of data has left analysts scratching their heads, trying to make sense of the economic fallout. From the trade deals. As Mohit Kumar, economist at Jefferies, notes, and as of now, there has been very little tariff impact on the hard data. But with the ECB holds rates steady amid U.S. tariff uncertainty. ECB halts rate cuts amid U.S. tariff uncertainty. A bold move or a gamble? The European Central Bank, ECB, has taken a surprising turn by pausing its most aggressive interest rate reduction strategy since the 2008 global financial crisis. Why the sudden halt? The answer lies in the murky waters of U.S. tariff negotiations. Navigating through the intricate world of central banking, the ECB decided to maintain its key deposit rate at 2% this Thursday. This decision comes on the heels of 8 consecutive interest rate cuts that began in June 2024. But here's where it gets controversial. Is the ECB's cautious stance a prudent move to safeguard the economy? Or is it a risky gamble that could backfire if tariff negotiations drag on? Why this matters? The ECB's decision reflects a broader economic uncertainty. By holding rates steady, the bank is essentially waiting for a clearer picture of how President Trump's tariff policies will impact global trade and, by extension, the European economy. And this is the part most people miss. The implications of this pause are far-reaching. It affects not just European markets, but also has ripple effects on global financial stability. What do you think? Do you believe ECB is making the right call by pausing rate cuts, or should they have continued their aggressive strategy despite the tariff uncertainties? Share your thoughts in the comments below and join the debate. Copyright 2025 Dow Jones & Company, Inc. All rights reserved. 879900C BE856 8187 D5 Edit 447 B1C DB8. For more insights, explore our economy and central banking sections. 1. Economy, and 3. both like wsj.com/economy. 2. Central banking, where other worlds participates, and to stay updated with the most popular news and opinions on our platform.